Hey there, it's Mike Langford. Welcome to another episode of the Augmented Advisor podcast, brought to you by Blueleaf. On this episode of the show, John Prendergast and I are joined by Jason O'Shaughnessy, Head of International Business at Envestnet Yodlee. Now, if Envestnet Yodlee is not a name that rings a bell to you, well, I am excited for you because you are about to get a peek behind the curtain of one of the companies that makes our industry run. Envestnet Yodlee is what I like to call a driver company. Their technology solutions touch every corner of the financial services industry. And in this episode, we're going to be diving into a couple of areas that have really transformed the wealth management industry, specifically account aggregation and connectivity. Think about how much your business has benefited from the ability to use services like Blueleaf to gain visibility into all of your clients' accounts, whether those accounts are the ones you manage or the ones that are held away. Just having a holistic view of their financial positions really helps your relationship with your clients and gives you lots of opportunities to serve them better. And that's just the tip of the iceberg. Just wait until you hear Jason and John discuss the promise of what's to come. Very exciting stuff. Before we get started, please do make sure you take a moment to subscribe to the podcast on Apple Podcasts, Spotify, Google, Amazon, the YouTubes, or wherever you like to get your podcast jam on. And if you have a question or a suggestion for a topic or a guest for the show, please feel free to reach out by shooting us an email, podcast@blueleaf.com, or swing by the website or hit us up on the socials. Blueleaf, John, myself, we're all really easy to find and very active on LinkedIn, Twitter, Facebook, wherever you find people. You can find us. I'm super duper easy. I'm at Mike Langford basically everywhere, okay? All right, let's get to our conversation with Jason O'Shaughnessy. Well, John, Jason O'Shaughnessy, welcome to the Augmented Advisor podcast. Great to see you, gents.
Good seeing you, buddy.
Good to be here.
Yeah, it's fantastic. And so this is our second episode of this show, Jason, just so you know, and I'm not sure how this makes you feel, but this is the second one where we've had a European guest on the show. First one was a French lady. So, I know there's a little competition across the channel there. So, you better bring your game today. It's going to be a great one.
Yeah, some people would say I'm not European. Not I. I class myself as a European, but strictly speaking.
There was a little tiff recently.
It was a little bump in the road a couple of years back.
Fantastic. Well, Jason, we're thrilled, absolutely thrilled to have you on the show. And we're going to be going deep and wide on the concept of account aggregation, which is something that's really near and dear to John and the team at Blueleaf's heart here. So I'm going to let John just kind of kick this off because he's been like chomping at the bit, or is it champing at the bit? I think I was corrected by...
It is champing at the bit. That's right.
The bit. So he's been champing at the bit to dive into this episode. I'm just going to cede the floor and let John just lay into it because I'm super excited about this conversation.
Yeah, as am I. As Mike said, Jason, super excited to have you on. And account aggregation is something we've been doing for a decade and in all manner of ways. And we've been a partner of Yodlee's for a really long time. So just thrilled to have you on. So thanks for coming. So I think to start off, one of the toughest parts here is we really need to define terms. And, I don't want to give sort of a dictionary lesson, but I think it's important to talk about what we mean when we're talking about account aggregation. And we're going to talk about part of that today. So for the audience, account aggregation is the technology and the process of automating the collection of financial information from accounts at different institutions and bringing it together. And that way it allows for things like verification or reporting, analysis, monitoring, etc. So from a wealth management perspective, there's two categories to care about. And they're really different, institutional and retail. So institutional aggregation is when you bring together many accounts that your firm might manage, typically via a direct link from an institution. That's actually a pretty easy category. Today, we're going to be talking about the much more challenging category of retail account aggregation. And this is the category that many of us think of, where an individual or client's accesses via their personal login to connect with their account. And in order to do this today, we use a variety of approaches, and each of them with challenges and different levels of success. So, Jason, with the stage set for advisors and wealth management executives in our audience, I wonder if you might shed some light on the ways in which account aggregation is done, the various approaches, and talk about some of the trade-offs.
Yeah, thanks, John. And you're right. I mean, there are a number of ways of, I suppose, achieving account aggregation. And I suppose the most commonly used way of enabling users to connect their data and view those through a single service that they may be provided by an advisor firm is data scraping, which has been around since we pioneered this back in 1999. Ultimately, it takes users' credentials, consented user credentials, and on their behalf in the background, we access the data, or we enable them to access the data through their online banking environment, and we pass that data back. And that's pretty common practice in the US, has been since 1999. And it's probably a common practice in a lot of places around the world still, while financial institutions start to get themselves in a position where they can give you data feeds. They're not there yet, but that does bring us on to the second one, which is open banking or open finance, depending on where you are in the world. And places like the US, Europe, UK, Australia, India, and other markets around the world, financial institutions are starting to open up their data with direct feeds, or APIs, as we know them as. And for those, we are connecting securely to those APIs. In some countries, it's via direct agreements with those financial institutions. In other countries where it's mandated by the regulator, there aren't financial agreements, but there's responsibilities that you have to adhere to by the regulator in order to do these things in the right way. And that enables us to invoke a connection to typically your bank's website, but via a secure token to pull that data in. And that's becoming more common practice. It's becoming more common in the US now over the last 24 months. It's been around in the UK and Europe for the last 3 years, 4 years. It's just launched in the middle of last year in Australia, and it's been up and running in India as well for a few months. And then the final one is probably direct connection. So actually, before the whole open banking, open finance came about, and it was purely data scraping, you did have financial institutions that were innovative enough to give data feeds to third parties like a Yodlee. And we have a few of those as well. And they can come in any kind of guise. They're a bit like open banking because they're direct data feeds, in the same way, but they may not meet a standard. So for example, there may be 10 financial institutions that we connect to with a direct API that's outside of the open banking world. And there may be 10 different standards and 10 different formats. And it's companies like ours' responsibility then to normalize the data and make it available to our customers in that way. And so that's kind of it. It works in a secure and reliable manner. It enables you to go off and get data on an ongoing basis daily to provide the service that the consumer has signed up for. And hopefully it delivers great value through the applications that third parties are using that data for.
So can you talk a little bit about the challenges that data scraping presents that led to these other innovations?
Yeah, I mean, data scraping came about because financial institutions didn't really have connections. In fact, didn't have connections for third parties. And there's probably a balance between one, not being ready to provide connections, and two, why do we have to provide connections to third parties? This is our data, we're Mr. Big Bank or whoever it may be. Thankfully, over the years, that's changed significantly, which is great to see. But because of that, companies like us pioneered scraping. When you build screen scraping, what you're doing is you're building a secure connection to a website that is logging into your account, or enabling you to log into your account through this connection. And then in the background, we're collecting the data that the user has asked us to pull into the system, or asked you to pull into the system, which may be transactional data, balance data, and date of that transaction, for example. Now, that's a full-time job, because if you think about it, we're reliant on the website being up, the online banking website being up all the time. So if the bank website is down, then the connection is unable to get the data. If the bank website is complicated, then we have to go through a number of steps to get that data. So you could slow that process down of pulling that data in. And also, if the user changes their online credentials for whatever reason, they have to update them into the application that they're using, because otherwise the system will fail, as an example. So, when you look at data scraping, you're reliant on so many other elements that it means it's a full-time job to maintain that service. Now, I think we do a great job. We support 18,000 connections around the world. It's a full-time job. We've mastered it so that, when something breaks, we get notified very quickly. Obviously, when you look at APIs, if you look at the open finance, open banking world, all of a sudden you connect into an API. Hopefully, and historically, APIs very rarely are down, so it's a direct connection. It's a secure relationship connection with that institution rather than a third party securely going in and doing that process. And also the speed should be faster. So, for example, connecting an account should be a lot quicker, because you're going to an API and pulling all that data rather than the connection having to go to look for that data in various data points on that website. So the merits of getting it via an API in the long run will surpass screen scraping. Now, the thing to bear in mind is it's I suppose a vendor like us will want to ideally we'd love to do everything via an API, but we've got to offer a combination of both, because if you take UK as an example, in Europe, open banking only delivers payment accounts or transaction accounts. So that's bank accounts, that's checking accounts, and the odd savings accounts. But if you wanted to power a service that brought in investments or pensions or loans or mortgages or 401ks, as an example, they're not available. So we still need the tools until those financial institutions have widened those account types into those APIs.
It's pretty fascinating. I love the promise of open finance. Or you and I have had a few conversations on this. But I think one of the things that helps is also kind of have a bit of a historical perspective of like how we got here. I mean, like Yodlee, as you mentioned earlier, was pioneer in the concept of account aggregation and financial connectivity. And today it's kind of hard to imagine, but it wasn't all that long ago that financial advisors had to ask their clients for like, hey, can you bring in a paper statement so I can see like where your money is and what's going on in your world? For those held away accounts.
And that's still happening today, Mike, in a lot of places.
It's pretty. I think the average person who works in other industries would be pretty shocked at how paper intensive our industry still is. Unfortunately, there's probably still fax numbers going around for a lot of stuff. Heck, one of my first jobs, you guys will appreciate this, and I'm not that old, frankly, but one of my first jobs, I worked for a company called Boston Financial Data Services, which is owned by State Street Corporation, and we were basically having stacks of mail dropped on our desks in the morning, and it was applications to open a mutual fund with a check, either paperclipped or stapled to it, and you had to type all this information in manually and then get the check scanned in, and it was just a fascinating experience to see that. So, you fast forward today, and you and the team are leading the charge to help the industry enhance something called open finance, as you mentioned. And you mentioned that open banking and open finance are used a little interchangeably. But given some of the prior conversations you and I have had, I know that it was actually open banking kind of led to what we see as open finance now. And you tipped a little bit like how we got here. But maybe we could talk a little bit about that history, because I think it helps us appreciate what we're doing and where we're going.
Yeah, I think like anything else, once you start to see pressure from the customer wanting to have access to their data on various apps that they may use or services that may use, financial institutions start to look at this and go, right, this is something we need to do. More importantly, when they start to see volume. So if all of a sudden I can see there's 1 million customers that are using a service aggregating my data, the financial institution typically wants to take control of that. Say, look, I want to, if this is going to happen and my customers want it, I want to take control of that. Plus also they want to make sure they're doing it properly and their customers are protected and all those good things. So there's lots of key points for that. And I think if you look at the volume of usage on the platform across many organizations in this space, like an Envestnet, Yodlee, there's enough there that drives the adoption for banks to say, right, how do we make this easier? How do we work with third parties to give our customers access. And I do genuinely think that if you look at users or if you look at customers of banks, it's probably unfair to keep picking on banks, but if you look at a bank and you look at typically how they've built up their loyal customer base, is they've often put a pod or a branch near a university or a college, and that's how I grab my customers, and hopefully they'll be with me for the rest of my life. Tomorrow, their customers are going to be the students who are able to connect their bank account in a bill sharing app or a rent app or whatever it may be, or paying for student fees or whatever it may be. That's what's going to encourage me as a user. And I just look at my son as an example. He uses like the new banks like Revolut as an example on his app. He hasn't signed up with any traditional bank. He uses Revolut because it's easier. It was so easy to sign up on his mobile phone, to open up an account. It was just easier. And I think a lot of those financial institutions are seeing that now, which is why they're making it easy for their data to be accessible. Some are taking longer to get there to see the value. But I do think as this starts to grow, if you take marketplaces like Australia, their open banking initiative is all of the accounts that you can possibly connect, unlike European PSD2 and UK, where it's just payment accounts. And I think that gets wider. I think the other thing that brings that on is when financial institutions start reaping the benefits of having access to open data. And we're starting to see that already, where a financial institution, having real-time access to a bank account to approve a loan or open up an account for a customer that has an account elsewhere, that's real value. And once they start to see the benefit, this becomes a strong product. But I will say something. If I look at the kinds of applications that have driven that, advisor type solutions are absolutely that. I mean, we see it with a lot of our customers, and John can contest to this with his product. But if I'm a user or a client and I want to go and see an advisor, most of the time I don't want to travel anywhere to see my advisor because I've got a busy day. I don't want my advisor to knock on my door when I'm just opening up my first beer in the evening. It's kind of like, do you know what? I mean, I just want to relax a bit. But if I can go to a website and connect all of my financial accounts really quickly, and my advisor can look at those accounts and start giving me advice, but more importantly, not just give me advice when I see them on the 1st of January and I bring all my accounts, but actually on an ongoing basis, because that data is being updated daily and I'm getting proper good financial advice, which I probably wouldn't have got without those connections. Because both, I suppose, in the advisor space, they've seen the value, but clients or customers have seen the real value of that and the convenience. That's also driven a lot of this adoption as well. Probably lending is the other one, where you actually have access to bank statement data for affordability is a big one.
So you talked a lot about open banking and what it looks like in Europe and in Australia, and I'm curious if you can give us a sense of its penetration in the United States. The environment's quite different, and give us a sense of, say, the percentage of institutions or something like that that have these type of connections today in the U.S.
Yeah, the US has really taken off over the last probably 12 to 18 months. The number of institutions that have opened up their data via structured data feeds now and APIs are mainly the big, large institutions. So the big, large banks, probably if I look at our platform, you're probably looking at the majority of the volume that you would see from your platform is coming from those big blue chip institutions. The majority of those are now opening up their data with data feeds. So it's absolutely getting there. It does take a little longer so if you look at somewhere like the other countries that have got open banking where it's regulated and mandated by a regulator, actually you can just say, right, I want to build a connection to bank A, B, C, and D, and you can just go off and do it because there's sandboxes, test environments, and I haven't got to worry about anything because I've set myself up as a regulated entity with the regulator. At the moment, in the case of the US, I have to enter into a contract term with each financial institution if I want to access their data. And because of that, that's what takes its time in order to be able to get that momentum, rather than, they built some great, a lot of these financial institutions built some great APIs, you can access their data. It's that contract that you have to put together that both protects them and their customers and the third party connecting to them. But we've got some good traction. I would love to see this being regulated so that you had a standard structure, a standard format. You got regulated as an entity, and therefore you could just go off to every institution, a bit like Europe and the UK. And you kind of you've got your badge that says, look, I'm approved and trusted over here. I can now just come in, and it would speed things up. But I do think, probably by the end of this year, that it'd be hard put to find any large major blue chip financial institution that didn't have their data available via an API. Obviously, credit unions and they'll take a lot longer because of their infrastructure, but it's definitely going in the right direction.
And by institution count, that really sounds like you're talking about by volume of data of accounts, et cetera. You're going to have a large majority of the volume covered. But of course, it seems for most advisors, it seems every client's got one or two institutions in that long tail.
Yeah.
And I'm curious why you think it is that some of the smaller institutions haven't embraced it beyond resources. I mean, clearly there's a resource issue here, but even the big institutions have pushed back for years and are just now getting their heads wrapped around it. So why the pushback on what is clearly a beneficial move in the industry?
Yeah, it can differ greatly from institution. You've got institutions that will go, look, this is my data. Why should I share it? That's not what we do. You've got some institutions that feel like the data with them is the safest place for the data to be, and so therefore, no third party should have access to their data. And then you've got institutions that even some of the big ones just are not ready to open up their data because there's a lot of work they've got to do. Like, for example, there's still a lot of institutions that have disparate sources in the back end, even though at the front end it may look like everything's integrated together, but actually in the back end it's not. So they've probably got to do a lot of work in order to be able to provide a single silo in order to open that data up via a single connection to a third party. So it does differ greatly. I think for the smaller institutions like the credit unions, again, it can widely vary. So it could be, what's the point? I look at how many customers I've got and how they interact with me and the kind of my customer base, and actually it doesn't really make much sense for me. Through to a lot of credit unions, as an example, will all run off the same type of platform. So if you look at the companies out there that provide a banking platform for thousands of credit unions, they're going to rely on their platform provider to try and do something. And then obviously if a platform provider is looking to open up their APIs, that's going to be standard across all of their credit unions, that takes a little bit longer to do. But speaking with some of them, they're very engaged and they want to do that. And then it's just really about, with some of those credit unions have their own systems, do they really have the technical skill sets to support it? Now, it feels like the way I've just mentioned that is that the credit unions won't do this because they're luggards and they're not technically capable, but they're not. There's a lot of innovative ones, but I suppose they all have their reasons on why they're slower to the marketplace. But absolutely, the bigger institutions, they are driven now. I think, there's so much in the press, there's so much demand from users, there's so much demand from third-party organizations like yourselves who are pushing for this stuff. And I don't think I think they realize this now, but they can't just step back and go, no, we can't provide an answer for our customers anymore.
Yeah. It's interesting too. You alluded to this earlier in the conversation that much of this is client driven, right? The end financial consumer drives what they want from their financial institution. And so you may have some financial institutions, just like we see some financial advisors who their client base is older, right? And is not as technically savvy and is not sitting there going, you know what, I need to see all of my information on my phone and I need to be able to connect with my credit union, again, not to pick on credit unions, and have seeing that side by side with my investment accounts. That might just not be a thing that they care about, that they're still very much in paper environment or what have you. But just like financial advisors, we like to see, like we tend to tell them, hey, listen, that's wonderful, but in the long term, your business is going to need to service younger, more technically flexible clients, right? Just because the way today it's working for you doesn't mean tomorrow it's going to continue working for you, right?
No, you're absolutely right. And the other key thing about all of this is that actually the end user doesn't want to know about all of this. I mean, I can guarantee you, if invited at a barbecue. Obviously, we very get the opportunity in the UK because it's always grey and rainy. But when I do go to a barbecue, God forbid someone stops me and asks me what I do for a living, because 5 minutes later they are nearly asleep. But if I was to say to them, have you ever used this app where you connect your accounts, it rounds up your spend and you can invest it? They go, oh, I love that app, it's brilliant. That's sexy, but nobody wants to know about open banking, open finance. As an end user, I just want to know it works. I click a button, connects my account, I get all the data.
You know what's funny, Mike, about what you brought up about younger users and older users? I think there's two interesting things. You know, we often hear from advisors, well, my clients didn't ask for that. And I think at the larger banks, you know, their response has been similar, right? Our clients didn't ask for that, but what they noticed and what we see and what we try and educate our advisors about is that when you open this up and you watch behavior, right, what people actually do, they vote with their feet. They vote in terms of how they behave. And, you know, one of our favorite lines is, look, grandma is on her phone on Facebook looking at the grandchildren, and she's also adopting banking online on her phone because, you know, that's the impetus, that's the in. And to give you some idea, we released a new mobile app this past year, and our mobile usage shot from, you know, we had a mobile responsive, so you could use the website on mobile, but our usage shot from something around 10% mobile to now almost half of our users, our end client users, went mobile. And our average user is almost 70. Wow. So they're there. Yeah. You just... the pandemic made everybody mobile and remote, and I think it's another big driver here because people are on the go now in more ways than they ever were before. They're more comfortable because, let's face it, we had to all get comfortable being remote and doing things remotely. So I think it's just the world changed, and I think it's great to see the large institutions in particular starting to respond to this with open banking. I'm curious, though, you know. Oh, go ahead, Mike.
I was going to say, it's like that old famous, you know, Henry Ford quote, right? If I had asked the customer what they want, they would have said, I want a faster horse, right? So we invented a car. And the same is true here. You're not only, if your customers haven't been asking for some connectivity in their accounts, they may just not know how to articulate that, or it just may never have dawned on them that they should ask their financial advisor, hey, listen, can I see all my accounts by logging into one spot? They may not have thought of that, even though they may be experiencing some frustration, as you said, John, like when they're opening up their banking app and then their finance app and then their insurance app. They may want to see it there, but they just never expressed it to you. Now, if they're given the opportunity to see it, they'll be like, boom, this is what I've been looking for.
Exactly. Yep. Exactly. You know, without open banking, one of the things that we've observed is different aggregation sources performing differently, different institutions, different types. You know, not only does not everyone connect to the same group of institutions, but not everyone does it as well. Like Yodlee is particularly good at investment accounts like IRAs and 401ks and the like. You know, in thinking about that, you know, why is that? And what do you think advisors should take away that can help them think about how to choose a partner or, how to think about using aggregation?
Yeah, I think, I mean, we do it well because, I mean, we pioneered this stuff back in 1999. We've been doing it a long time. And so what does that mean? It means we made a lot of mistakes at the very beginning. We learned from those mistakes and we fine-tuned it from a security perspective. You know, remember when we signed our first bank customer, we had to jump through hoops to appease them on security and thought, great. When we signed our next bank customer, job done. We signed the next bank customer. That security review we done was rubbish. We had to agree to these other standards, and the third bank customer more standards. And so over the years, we've built up standards and processes that enables this, I suppose, this finely tuned engine to work really well, and we can spot issues quickly. I think when you start to look at certain account types outside of APIs, it really just depends on the kind of site you're accessing the data from. If it's a really complicated site, it will take a lot longer to get that data. If the data you need is 20 pages down versus 2 pages down, it's going to take longer. But I suppose from our perspective, we've just been doing this a long time, and so we know how to do it well. And that normally means when you say you've been doing it a long time, you're not sexy anymore. We still hope that we're sexy, but we do it sexy in a safe and secure way. I'm sure everybody else is, but we've been doing it a long time. We have lots of financial institutions which are customers, and when you have lots of financial institutions that are in customers, they put a lot of onus on what you do in order to make sure that they're doing the right thing as well. So I think when advisors are looking for a platform to plug into, I think it's got to be there are probably two simple things: breadth of data and quality of data. Because that's ultimately what they're going to make their decisions on, aren't they? And they're going to base their advice on. And they're probably the two key points, I think.
That makes a lot of sense. In thinking about the types of data, as you mentioned, the breadth of data and the quality of the data, have you seen any trends where this type of data is more in demand, right? Like, so, advisors and financial institutions, the consumers of the financial institutions are looking for some things more than others, right? That the demand is stronger. Like, they looking to see more of their investment accounts, or are they looking to see more of their insurance stuff? Or what are some of the things you're seeing that are more, I guess, trends on the consumer side?
Yeah, it varies, because obviously depending on the kind of application that you're building. If you're powering an advisor type solution or a money management type solution, they want as many accounts as they can get as possible, because they want to see that true 360-degree view of the world, whether it's an advisor giving advice to their client, or whether it's the client that wants to see a 360-degree picture to better manage their finances.
Yeah.
And I would say, if you looked at two marketplaces that I see often most interaction with, it's around advisory type services, because because if you think about it, when you look at an advisor type service where they're asking clients to connect their data real time in order to be able to give them advice, it's kind of operationally, you need that data. So is there a better way of doing it? Because then when you look at the other service, where the other two solutions where I see a lot of interest, just like the advisor, is accounting packages. Small businesses have to upload their data to run their business, and half of the time they don't want to download statements and upload statements. And then the other one is, we've talked before, is opening up an account or lending, where in order to approve that loan, I need to see 3 months worth of bank statements in order to do a proper affordability assessment in order to give you a loan. Those three scenarios, the data is required. So this is really an operational thing, and it's very easy to build an ROI around it that says, from a business perspective, well, if I do this, things will be faster. I can prove things quicker. I can give advice faster. I can be more proactive and more productive. And then from a client side, I can get up and running and do this quicker. I haven't got to sit face to face for somebody. I'll get a decision in real time. And so there's a real win. And then when you start to look at services that aren't like that, so it's a nice to have. I'm not, I sign up to them because it sounds cool or they sound funky, and I connect my accounts. And then 3 weeks later, I've stopped using it because actually I'm not getting a huge amount of value. But it might be the same accounts. So for me, it's always, if you're offering a service where this is improving it, speeding it up, making it more efficient, I can get better advice, as an example, then we see huge adoption rates.
What are your thoughts on some of the kind of future opportunities for this stuff? Aggregation and connectivity are surely going to expand as open finance gains traction, and especially here in the U.S., right, where we have like just a high innovation culture, right, startup culture. You see a lot of the fintech startups are started here. What changes do you think we're going to see in the coming years, and how do you think that'll translate to like new opportunities for advisors and their clients? What are you seeing? Crystal ball, I guess, is what I'm looking for.
Yeah. it's hard to tell, because I think as much as we talk about this, still the financial institutions won't make it easy, or won't move very fast in order to open up data. But I'd love to see, and I do think we'll eventually get there, but I'd love to see open finance genuinely being open finance. So open finance would mean I can easily connect to my bills, I can connect to my tax, I can connect to anything related around finance, but then extend that. Why can I not connect to my utility bills? Why cannot connect to my health file that's on record, for example, so that all of that information and data is easily connectable? I mean, if you think about in the consumer retail space, I can connect to my Spotify easy. If I'm a business and want to develop against the likes of the streaming channels, I can connect to those easily. All of those environments have opened up their platforms, likes of Stripe or whatever it may be, PayPal. Now we need to see this for everything else. And I think as the momentum starts to happen, that will happen. And I think if you're an advisor now and you can have access to richer sets of data that include people's bills or their tax information, maybe information that even comes from, if advisors are advising for small businesses, if you can grab information from their ERP system or their CRM system, and as well as their accounting packages as well, very easily. I'm mentioning a few, but there's a whole lot, and I do think open finance is starting to go in that direction. It will be slow, but open finance should genuinely mean finance is open. As long as we're showing that we can do it securely and safely, and everyone's getting value out of it, then I think that's the right way to go.
It reminds me of a conversation we had with another guest a few episodes back, Theo Lau, and she was talking about the idea of embedded finance, and as things open up technically enough, they talked about the idea of ambient finance, right, where bits of your banking experience become embedded, say right at your point of checkout, and sort of all of that. And it feels like open finance and opening account aggregation is really a key to enabling all of that.
Yeah, if you look at accounting packages, I suppose, in Europe, because obviously open banking is both account data and payment initiation. In theory, when I go into my accounting package and I connect my bank account that brings all my data in to help me with my P&L and maybe what invoices I can pay, I can click then pay, and I can pay an invoice directly, all from the accounting package. But in theory, that's integrated now into my bank, because it's a direct API that instigates a payment from my bank, and it's an API that's getting data from my bank about my account. And you're right. We at Envestnet Yodlee, we fully embrace this whole embedded finance piece, and probably the one over the recent years, which has probably been the biggest embedded finance, is probably buy now, pay later. When you think about, you go to checkout, you cash out, and you got your options to pay and get credit and everything, and it's all very embedded. And I think that's definitely going to grow.
So, Jason, given the major trend in our industry toward holistic wealth management and more automation, this should be something that our entire industry gets behind and pushes for faster change. As you mentioned, the large institutions don't necessarily move that fast. So what do you think it is that advisory firms, large and small, can do to help move this along?
It's a great question. In the US, I'm unsure if this is available, but what we do see in certain markets around the world is when there's a passion to do something like this, and they want to drive both change and speed up the process of adoption, you typically find that a group or a body will be created, and they use that as a voice, I suppose a bit like lobbying. And I don't know if in the US there is an advisor group that is lobbying from a technical perspective, because I imagine there's probably groups built up by a selection of advisors, but is there a group that's built up from advisor firms, technology firms, so platform providers? It could be the likes of Envestnet, Yodlee, and our competitors, and then some big financial institutions or funds, and then together collectively you use that as a voice and a sound piece to drive this innovation, because that's typically where we start to see adoption change happen really quickly, and this move faster. And probably a good example is the pension dashboard in the UK, where those types of organizations, so technology platform providers, data providers, advisors, providers of financial products have got together, and they're all looking at ways of how they can create an API to give access to pensions very quickly. And that's outside of the payment, the PSD2, the Payment Services Directive, which is all about open banking. So that's probably the best way, because I think I think your clients and advisors, I mean, I can't imagine many advisor firms that aren't knocking on their providers' doors or their funds' doors and saying, hey, we want more access to data and faster and easier and so on and so forth. So, it feels like when you put a body together that is made up of all of the parties that have a say in all of this and can benefit from it, that typically tends to make change happen a lot faster.
Yeah, I think in the U.S. there is an industry group. I forget its name, but it's primarily comprised of some of the largest financial institutions based in the U.S. and some of the largest aggregation participants. So, Yodlee is there, as well as some others that are clearly lobbying for opening the channel up, and that's quite a large body.
That's the data exchange, isn't it? I think.
That sounds right.
Yeah, I think it's, I'm aware of that one. But you're right. But that's not very specific to a vertical or an industry. And so if I take the UK, we have a whole bunch of them, F-Data, and a whole lot of them are very focused around open banking. But the pension dashboard is very focused specifically around just accessing data for pensions, as an example.
It's really fascinating. On one of our first episodes, we had Jeffrey Brown, who's the president or CEO of NAPFA, which is the National Association of Personal Financial Advisors here in the U.S. I'm not sure if they're global or not. I think it's just a U.S. organization. But one of the things he said that really stood out to me was he's like, look at the rest of the world, what they're doing, all the other businesses you use, subscription models as an example, as you alluded to earlier, Spotify connectivity with the APIs where you can connect your Spotify account to Twitter and Facebook and other things. Look to those other things, because those industries, because of the lower friction rate, because they're not regulated and so forth, the adoption and innovation is faster. And what you're seeing is consumer preferences, right? Again, subscription base, all you can eat model versus buying music. I want to subscribe to music or movies or what have you. And that seems like an interesting way to kind of articulate that to advisors, I think, and consumers. Like if I was an advisor and I was trying to figure out like, what do I want more of? I'd ask my clients, like, what information do you wish you had? Like what would you do if I could give you more data? Like what's the thing that when we sit down and meet together, you're like, I really wish Mike brought this to the table. And the same thing if you're an advisor and you're thinking about, the information you're getting from your broker dealer or whatever, like, what do you wish you had to present to your clients? Like, what would make your life a lot easier and so forth? Because and don't be afraid to ask that question. Like, here's something that really popped out to me. Like, we're recording on a solution called Riverside. And, when you're watching the finished product, you can't see this. But on our screen, there's a record button. And previously, it used to be a record and stop button. And to see how long this recording's been going, you used to have to look way over to the right, up at the top of the thing. And I asked Riverside people, like, can you put that more in the center of the screen? Like, so I don't have to look all over the place. Like, how long have we? And now it's right on the record button. It says, the 42 minutes or whatever at this current mark. I love that innovation. I'm not sure if the only person to ask for that, but I'd like to think I had something to do with it. So ask your advisor.
Grassroots innovation. I mean, we certainly see that at Blue Leaf, and for us, with respect to aggregation, the challenges of data scraping. I think most of our industry is still in the throes of that and dealing with that. And I think the thing that I'm taking away from what you said, Jason, is we need to help channel that energy and that frustration when things go wrong with the older technologies into advocating for change to the newer technologies, which are better and work, and quality of data is better, and et cetera. And I think if we can start to channel that energy, we can increase the grassroots pressure for the movement.
Yeah, no, you're absolutely right, John. And I think ultimately everybody wants to work together to make this happen. Consumers want an easier way of doing things. They don't care how it's done. They just want it to happen. If you look at Blue Leaf, they need this innovation to keep moving forward and providing the kind of service that you provide. We want to be in this space because we've lived it for years. And then the financial institutions, I think a lot of them do really want to do this. There's just a lot of stuff they've got to get through in order to be able to do it. There's always somebody in the institution who goes, well, that's great, but what does this mean from a risk and compliance perspective? And, they're a big engine, so it takes a whole long time to go through that process. So I think we'll absolutely get there, but you're absolutely right.
Fantastic. Well, Jason, this has been a fantastic conversation. I am sure that folks are going to want to learn more about this process. What's the best way for somebody to, kind of drink from the Yodlee fire hose about what's all going on here? Where should we send them?
Send them to Envestnet.com. They will see everything that they need to see. It's a fantastic website.
I love it. Perfect. We'll make sure we get that linked up in the show notes. Thank you so much, Jason. It's really been a privilege having you on the show. Thanks, buddy.
Great conversation. Thanks so much.
Thanks, John. Thanks, Mike.
Thank you very much for listening to and or watching this episode of the Augmented Advisor podcast. It was fantastic to have you with us. I hope you enjoyed this conversation as much as we did. Huge thanks to my man, Jason O'Shaughnessy from Envestnet Yodlee for joining us as well. I love how we got to explore the promise of open finance. This is just a really fascinating topic. I can't wait to see what the future holds. As I mentioned at the top of the show, please do make sure you subscribe to the podcast on your favorite podcast platform, and do us a favor. Please make sure you give the Blue Leaf page a follow on LinkedIn and Facebook, and give the Twitter handle a like and follow. Love to be connected with you, right? We are sharing every single one of these episodes and a lot of other content that's related on all of those social accounts. Be great to have you with us as part of the community, okay? All right, that's all I have for you today. Please do make sure you're staying safe and be nice to each other. We'll see you next time on the Augmented Advisor Podcast. See ya. Bye.